Good afternoon and welcome back to Trading Options Network. It is October 11th and pretty green day overall. Before we go ahead and get into anything, let's go ahead and go get through our disclaimer. Obviously, everything we discuss is solely my opinion, not the opinion of Trading Options Network. So take the information as you will, but also take responsibility for your actions. And of course, be sure to like, follow, and subscribe on your favorite social media network, Trading Options Network. All right, let's get into it. All right, so yesterday we had the CPI, and today we had the PPI. Interestingly enough, the CPI came out hot while the PPI didn't. The PPI came out as expected or slightly dovish, to be honest with you. So it's kind of a mixed bag. Now, it was 3 months ago, I think, when the CPI came out in line and the PPI came out hot, and I was thinking to myself, well, if the PPI is coming out hot, even though the CPI is not, then I would expect the CPI to follow the following month, and that's exactly what happened. So the last 2 months, CPI has actually come out hot, along with the PPI, but now the PPI is coming out in line. The core PPI is in line, and the regular PPI is, again, it's actually came in a little bit lower than expected. So what does that mean for the CPI next month? Does that mean the CPI is going to be coming more in line next month? It's very possible, but obviously time will tell. Overall, it seems like the market is liking it. Obviously, we're very, very green. Tesla is having a bad day because there was according to some of the reports, the word was lackluster. I don't know what it would unveiling, I guess. Here, I'm reading I'll read it right now. It says Tesla stock plummets 8% after lackluster robo-taxi unveiling disappoints investors. So I don't know what they were expecting. If they were just expecting cars to just suddenly drive themselves overnight or what. I mean, I know it's been a long time coming. While I was looking at this and talking about Tesla, I did notice that Uber is up 10%. So let's see what Uber has to say. I'm going to pull up something on my phone in regards to Uber, see what kind of news they have. Let's see. Not really seeing anything. They didn't have earnings, but it looks like it gapped up. Let's just go ahead and pull up the chart. So Uber gapped up and then continued to run. Again, I'm not seeing anything. Bank of America Securities reiterates buy on Uber Technologies, maintains $88 price target. I don't know if that's what's causing it to jump a little bit. Doesn't really matter. I mean, obviously, it looks like Lyft has jumped. Oh, okay. Now it makes a little bit more sense. It says Uber and Lyft shares rise 10% after Tesla's robo-taxi event. So it's actually for the same event. Even though Tesla is getting crushed because of this robo-taxi event, I guess it's looking good for Uber and Lyft because obviously that means there's going to be more people needed for those companies. And obviously there's more people in Uber and Lyft, then it's going to bring in more profits. So that does actually make sense as to why Uber and Lyft as well are both jumping right now. Let's see. So Lyft, kind of the same thing. Interestingly enough, Lyft has been in a really bad downtrend lately. I don't think this is actually going to cause this to start moving up. I think this is just a reaction. Obviously, we had a nice bounce here, hit a little bit of resistance here at that purplish line. And yeah, we had gapped up and went across it today. But Lyft, I know, has been somewhat struggling for a while. One day, one event is not going to change that for them. They're going to need a lot more moving forward. Lyft, on the other hand, Uber, on the other hand, even though it wasn't, wowing stockholders or anything like that, it has been a little bit more neutral. But again, we'll just kind of see where everything goes from here. I think Tesla's going to be going anywhere anytime soon. Again, if we come back to Tesla, personally, anytime you have a big drop like this in a blue chip stock, in this case Tesla, we should expect some kind of movement from here, whether it's a continuation and goes down further, or people are thinking this more of a great time to buy because it dropped, $22, $21.11 from yesterday's close. So it could also be people seeing that as a good time to buy. So, if you wanted to get a little bit crazy, you can do like some kind of strangle or straddle on Tesla, with an anticipation that it will move a little bit forward, or move going forward in one direction or the other. So again, we'll kind of see what happens tomorrow. I would expect actually not tomorrow, but Monday. Whatever happens on Monday, is the market even open on Monday? I'm going to have to double check on that. It might not even be open on Monday. But if it's not open on Monday, then obviously Tuesday. Regardless, the next trading day, whichever direction Tesla moves, could be a potential opportunity for a position. So kind of just keep an eye out on Tesla. I'm not going to say I'm going to put it on my watch list. I mean, Tesla's kind of almost on my watch list by default because it's Tesla. So moving forward. All right. So again, S&P, come back to the map. Very, very green with some small amounts of red with the exception of Tesla. In fact, Tesla and Broadcom here are the only ones that I'm seeing. Oh, Adobe right there. The only ones that I'm seeing that are down more than 1%. It's 2 companies out of 500. Now, there could very easily be some of these that I can't see the numbers for. Like there's one right there, yeah. I'm not even sure what company that is. ALGN, Align Technology, down 4%. Yeah. So 3 companies out of 500. Oh, there's one right here. Let's see. That one is A.O. Smith Corporation, down 6%, but it's such a small piece of the S&P. What about this guy right there? Baxter International. So we got a handful of stocks that are down, more than 1%. But a vast majority are up, and a vast majority are up quite a bit today. 1, 2, 3% plus. Uber again, 10%. Lyft was 9.5%. AMD, 2.5%. JP Morgan, almost 5%. Bank of America, 5%. Wells Fargo, 5%. Citigroup, almost 4%. So yeah, we got a lot of green today. A lot of green. And again, with the PPI coming out, a lot lower. Well, I shouldn't say a lot lower, but lower than expected. Not surprised that it is moving forward. So here's what the chart looks like. We're definitely breaking out from this neutral movement we had for a couple weeks. Who knows how much higher we go? I mean, I wouldn't. You guys know me if you've been listening to me at all. I don't see us really going crazy up until the election, and then after the election, who knows what's going to happen after that? All hell could break loose, or we might shoot closer to $600 a share. Either way, again, I don't really see us moving a ton from now until the election, even though based on my scoring system, this would be a +3 market. I'm not getting into +3 trades, not a ton of them anyways. Okay, so the RSP, the equal weighted ETF, looks pretty nice as well. Breaking out also to all-time highs. So again, overall, bull market. There's no denying that we are in a bull market. I still don't understand why people put on the 20-day moving average when the Bollinger Bands is essentially the 20-day in and of itself. I just don't get it. Boom, boom, boom. There we go. That's how I like it. And yes, eventually I'll probably get my own subscription to FinViz, but since I am working with a proprietary trading company, I like to use the software that I have available to me. So anyways, here we go. I did add a new stock of the day. That's going to be Cisco Corporation. You'll see it in my social media later on today. But Cisco is coming out of the consumer staples, also known as the consumer defensive sector. Similar to real estate, it's been doing nicely, but it has just dropped below the 50-day moving average. Now, I will say the 50-day moving average is still in an upward slope. However, the 20-day has now started slanting down, and it looks like it's going to be crossing, in the sometime next week, unless something causes this sector to jump drastically. I don't see that happening, so I would not be surprised if the consumer staples sector has a little bit deeper of a pullback. The reason I chose Cisco is because if we compare these two charts, the consumer staples sector has been relatively bullish most of the year. Okay, if I were to go back a little bit more, you can see it's very bullish actually throughout the entire year. However, Cisco, not so much. Here's the new year. Yeah, it started up and went up on those earnings at the very end of January, but since then has gone pretty much down almost the rest of the year up until August. Mid-July to August is start moving back up, but that's not necessarily meaning it's converting into a bull market. It was just it was bullish for a little while, a month and a half, but overall, it still has been underperforming compared to its sector. So if the consumer staples sector does pull back more, which is very possible, then I would expect Cisco to definitely have a drop, maybe around to where we were at, towards about a year ago, honestly. If we look at about a year ago, we were at $62 a share, a little bit over it, between $62 and $64 a share. So it could drop, 10-15% very easily if the sector itself starts having a deeper pullback. Now, am I saying that my price target for Cisco is $64? No, not at all. If it goes down to $72 or, $70 would be even better, obviously. But if it were to go down to $72, I could very easily, if I opened up a position right now, it does need to trigger first. Okay, if I zoom in a little bit, it is green today, but this could just be a little bit of a rally, and then we start seeing the movement downward. So if that's the case, if that's what happens, for those of you who do follow me, I love that pattern when something breaks out and then what was formerly resistance now turns into support, or vice versa, what was formerly support now turns into resistance. That is one of my favorite patterns to trade. So if this does move up and then it rejects off of the 20-day moving average right there, then I'll absolutely be opening up a position on Cisco. Moving forward, let's go ahead and pull up our positions really quick. Give me a second while I load it up, because I've been on my phone all day. I haven't actually been on my computer much today. And I forgot to load this before I started this call, so just give me a moment. But we did open up a few positions today because of what happened with a PPI. For those of you who have been following me and continue to look at and watch my stocks of the day, you'll know that we had some bullish stocks on our watch lists. Come on. There we go. All right. Almost done. All right. Logging in. Here we go. Let's look at our positions. Of course, it must take 10 years to log in. Ta-da! All right. So, good old How I Met Your Mother. HWM Howmet, as you can see, we opened up a position. Now, go figure. We're getting kind of smoked on it so far. But I like this one. So this one is now being taken off of our watch list and being moved into our positions. All right, let's take a look at the chart itself. Howmet Aerospace. Why is this suddenly? All right, there we go. Howmet. All right. So, let me get my little pointer finger. There we go. Alrighty. So as you can see, we had a little bit of a pullback yesterday, but the stock itself has been moving upwards more. So it completely reversed yesterday and, is looking really good. Now, I did open this position relatively early in the morning. So I don't know, maybe I pulled the trigger a little bit too soon and there were a lot of people jumping in and it caused the premiums to be a little bit higher. That's totally possible. It's totally possible, in which case, whatever. It's a pretty large position, so $240 is nothing compared to the position. We have 20 vertical spreads here. So we have time. We went with the 100, 110 bull call spread. So as long as if it gets anywhere to 110, anywhere above 110, coming into that expiration date, which we do have 35 days till expiration, so we have quite some time to get there, we'll have max profit. Our trade price was, if we do the math, a little bit under $5. So it's about a 45-55 ratio there. So we're risking about $4.50 to make about $5.50 per contract. Okay. And with 20, so that's about a $9,000, or in this case, about a 3% portfolio trade. 3% of the portfolio. Okay? The value of the portfolio, that is. That would give it if you pay attention to how I do things, that would give it a score of a 3, which is on my confidence levels. That's right about in the middle. Okay? Again, I train and I teach people that you should never trade more than 5% of your portfolio, and my confidence score is the same as the percentage of my portfolio that I trade. So I will give it a confidence score of 1 through 5. Okay, it's technically 0.1 through 5. But nonetheless, if it's a 5, I'm super confident in the trade. If it's a 1, I'm not very confident in the trade. In which case, again, I'll go up to 5%. So if it's a 5% on my confidence score, then I'm risking 5% of my portfolio. And if it's a 1 score on my confidence level, then it's 1% of my portfolio. This is going to be a smaller trade, smaller position, I should say. This one was about 3%. So this one obviously therefore had a 3 on my confidence score. And the reason why it's only a 3, by the way, I love the chart. The chart is super, super sexy. Don't get me wrong. But again, up until the election, I just don't see us being super, super aggressive. This could very easily kind of just dwindle up to the 105 and maybe die for a little bit and then slowly go up. So I'm going to be keeping monitoring my positions very, very closely. There's no doubt about that. Next one, MasterCard. MasterCard was my stock of the day literally yesterday. Or no, I'm sorry, it was 2 days ago now. MasterCard is now on my positions list. The reason why? Well, it didn't trigger yesterday. When the CPI was hot, because as I had mentioned on Wednesday, if the CPI did come out hot, even though I liked the financial market, Wednesday was when I announced MasterCard as my stock of the day. I also said that if the CPI comes out hot, it's probably not going to be good for the financial sector. And sure enough, it did come out hot and the financial sector did have a red day. However, PPI came out today and the financial sector loved it. And sure enough, MasterCard is potentially breaking out of this pennant. Now, I could very easily draw in a line right here and say this where it's at right now. In fact, I love my little cursor, not cursor, but what do you call that? I can't think what it's called, but little crosshair. That's what the crosshair. The crosshair that it makes right here gives me a nice vertical line. I guess technically, if I want to be, a little bit more exact, I could say it's right there. And technically, yes, we are currently higher than the highest close, which would have been, or I should say open/close. On September 17th, it closed at $500.99. The next day, it opened at $501.28. and right now it's at 502.34. So we are higher than the previous previous high open slash close. Its actual high looks to be 501.80. So I mean, we're even higher than that. So if we stay up here, then yes, technically speaking, we have broken out now, just barely. But again, I like this chart a lot. I see us going up to the 510. The position we opened was a calendar spread. I'm sorry, it was a diagonal spread, not a calendar spread. We opened up the long 500 strike calls, 3 weeks till expiration, and we sold next week's 505 calls. So as long as it doesn't go super, super high, we'll have a pretty nice, return. If it goes up to 505 and finishes at 505, that'll obviously be the best case scenario. But if we just kind of go more sideways and we just kind of stay at this level between 500 and 505, from about right here to there, okay, then here, I'll actually go ahead and get my, there we go. So right about there to there. As you can see, here was our previous high from mid-September. Here we are today. But if we stay anywhere from about $500 to 505, we should have a pretty nice, oops, let me go ahead and get my little finger out again. We should have a pretty nice return, okay? So that's all we want. We just want it to stay between 500 and, would love for it to go up to 505. But again, if we just stays between 500 and 505 till next Friday, then we should make a pretty nice profit on this. Come back to here. We're up 248 in the day so far, so that's great. Philip Morris, gosh, I was just looking at this one a little while ago, and we were looking great. What happened? It must have rocketed up somewhere. Oh yeah, it sure did. It sure did. Not totally crazy. Okay, if we go ahead and just look at that chart, this is still obviously in a very, very bearish pattern. Can't deny that. Overall, from the last month or so, this is definitely a bullish pullback pattern. 20 is crossing the 50 and going underneath the 50 here. So yeah, it's a little bit green today. It's kind of interesting to me that it caused this to drop $1,500. That could just be a wide bid-ask spread. Could also mean that honestly, let's go ahead and look. Oh, the market just closed. Let's go ahead and take a look at the puts here. Yeah, that's what it is right there. The mark was 27 cents. Well, that is all going to zero right now because it closed out of the money. So if we go ahead and just do that calculation, 27.5 cents times 25 times 100, that's almost $700. So I guess I could have just looked right here. Actually, no, I couldn't. Never mind. Anyways, it's about $700. Okay, so we're going to be gaining about $700 right there. So again, that's definitely skewed a little bit. And then the last one, XOM. XOM, we opened up a position on today. XOM also is looking nice, and we are up $135 just for today. We also opened up a vertical spread, a vertical call spread. I'm sorry, not a vertical, a diagonal call spread. So we bought the 120s that expire in 35 days, and we sold the 125s that expire in 2 weeks. Okay, so we have 5 weeks and 2 weeks. It looks like we are dead even where we bought in on 615 or at 615. So there's nothing there. However, the 125 calls that we did go ahead and sell, we are up the 135 on so far. So looking good on ExxonMobil. If we go ahead and look at the chart for ExxonMobil now, again, same exact thing that I was saying the other day. We were looking for that pullback down to what was previously resistance. Now, I will say we didn't go all the way down, but we came pretty close to it. So again, if we look at our crosshair, we're making that, brighter gray line there. And right here, you could see it almost came down and touched it. It wasn't quite all the way down to it, but it did come down to a relatively close enough position for me to like it. Gapped up, got a doji. It did not confirm to want to come down more. It only turned into another green day, so that's why we went ahead and opened up that position. So ExxonMobil is now on our one of our trades. So overall, I like where we're at. Excuse me. TDS is the one that is still kind of. Let's go ahead and take a look at TDS. We have, 35 days till expiration still. And again, if we look at that chart, yesterday I had mentioned it's kind of at a do or die situation because we had opened this position. Again, I think it was right around in here. But even though it did go up, it's come down. It's just going sideways right now. So it's definitely due. I mean, look at how tight the Bollinger Bands are getting now. Those Bollinger Bands are getting a lot tighter. It's going to be moving in one direction or another soon. Obviously, for the sake of ourselves, I hope it moves up. But if it ends up moving down, we'll just have to get out of it for a small loss. But again, overall, this $1,400 from Philip Morris is going to go away. So you can ignore that number right now. That is not accurate. And then UDR. UDR was the position that we opened up yesterday. Apparently I never put it on here, so let's get that one on here, UDR. All right, so again, UDR is looking very, very bearish in the near term. Today, it didn't do much. It just kind of dwindled there. Now, I will say, you can see we have a trail stop. The reason I put a trail stop on here, I did actually want to talk about this today. We are technically short. I did not open up an options position on UDR because if we go ahead and take a look at the bid-ask spreads on these are not options trader friendly. Okay, these are massive, massive, huge bid-ask spreads. Okay, but I like the chart enough to where I'm saying I wanted to get in on I wanted to get a bearish position going. So we went ahead and we went short 1,500 shares. That's where I was comfortable with. And I put on this trail stop because if it does move higher than that, then I want to be able to get out of it. I don't think it's going to. I think we're going to be profitable in this trade. I mean, this little itty bitty green doji is not anything for that is causing any worry for me right now at all. None whatsoever. I think it just wanted to kind of run with the market a little bit today. The market was, again, overall pretty green. Okay. For this to only have that little bit of a movement in what was considered a pretty green day, that's not good for this stock. I see us continuing rolling over and continuing moving down over the next couple of weeks in the near term and everything. So I'm not worried about that at all. So again, I really like where all of our positions are at. The one that I'm not liking super, a ton right now is TDS. But again, if it does end up breaking out of this, I mean, technically it is a bull pennant, so it is technically a bullish pattern, but it is below that 20-day moving average. It is above the 50, but it is below the 20, and it kind of got rejected at a 20 today. So I don't necessarily like that. But again, we'll see what happens. It could continue to move up and hit, if I go ahead and draw a line here. There we go. And that's, why didn't it come? There it goes. I'll just use the orange line, the 50-day moving average for now. But you could definitely see it is coming to a close. So again, with the Bollinger Bands getting narrower as well, I definitely expect this to either break up or break down. I'm leaning towards it breaking up. That's obviously the way I hope it goes. If it doesn't, no big deal. We get out of it. Again, we don't win every trade we make. Otherwise, we'd all be millionaires and billionaires. But I do like where we're at. All right. What is on our watch list? Well, I did say that we are putting Cisco on our bear watch list. You'll see that video coming out on my social media later on today for that stock of the day. And honestly, I don't have anything else on our watch list right now. Most of the stocks that were on our watch list were bulls. UDR was the only one that was a bear, and we opened up that position yesterday after I did this video, before the market closed. As I had mentioned yesterday on yesterday's video, I even said, don't be surprised if I open up that position. Sure enough, I did. And, that was the only bear that I had on my watch list. All the rest were bulls. A lot of our bull positions, or a lot of our stocks on our bull watch list, all triggered today. So we no longer have anything on our bull watch list. So we'll see where everything goes. Obviously, we're going to have to continue adding to our watch lists and continue opening and closing trades moving forward. But hope you guys learned something today, and I definitely hope you have a great rest of your weekend. And until Monday, or potentially Tuesday, again, I'll have to double check if we're open on Monday. Have a good day. Have a good weekend. Take care.